My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we got a big treat. We've got Joe Fairless on the call. Joe is very well known to most people in the multifamily real estate space in North America. He wrote a pretty darn good book on the whole thing. He's got an amazing podcast. He's helped thousands and thousands of multifamily investors get started, keep rolling, get rolling, keep chugging through the tough times and the good times as well. So Joe, welcome to the show. Great to have you.
Well, Dave, looking forward to having another conversation with you.
Yeah, my friend. So as we're recording this, it's the end of 2025. Maybe give us a little snapshot of what you're up to in the real estate space right now, what the portfolio currently consists of, what you're kind of doing these days.
Sure. So the focus is and always has been on our current portfolio first and foremost. We are focused exclusively on value-add apartment deals, and we buy them in the Sun Belt in the U.S. And had some floating rate loans and still have some floating rate loans on deals. So the focus is finding solutions for those loans because, as we all know, interest rates skyrocketed along with rate caps that you need to buy for those properties. So it's navigating that and coming up with the best solution for those properties and the business model. And it's also identifying opportunities that are good acquisition deals.
Yeah,
we have purchased 2 deals in the last. Well, also the last one was bought.
Sorry, you broke up on me for a second there, Joe. You purchased 2 deals in the last what?
Yeah, the last 12 months we purchased 2 deals, and the last one we bought was from the lender, direct from the lender, and it was the lender foreclosed on another general partner, and they had this property, and we bought it for a little bit less than the debt on the property.
Wow,
that was owed. And we also got some financing terms. Since we're buying direct from the lender, we got some very favorable financing terms from the lender. And
so it's almost like the olden days with short sales of single family homes. You almost did that with a multifamily, basically.
That's right. Yeah, good connection there with that. That's right. I mean, it's something that there aren't a lot of distressed opportunities to purchase right now. There are some, and but where there are some, it's important to have the relationship with the lender, with lenders and being a solution for them. I mean, one suggestion I have for general partners is to if you don't have your own property management company, which I imagine most general partners don't. We do have our own management company. So I'll say how we solve for this, but then I'll say how most others can also solve for this and take advantage of getting good deals. How we solve for it is we told a lender, hey, if you come across any deals that you're looking to take back, I know you're going to need to manage them. So we'll be your solution for the management side, and then we'll just take a look at buying it too, but we'll at least help you out on the management side. And that's how we had a relationship with this lender. That's how we got this deal. If you don't have your own property management company, one idea could be for you is speak to your property management company that you do have a good relationship with and say, hey, I want to go to these lenders. I want to recommend you as an option to help them out as if they take back properties. And alongside that, I'm going to tell the lender, and by the way, I want to be on your list of potential buyers for it. So being a solution for lenders that are taking back properties and building those relationships can be very beneficial.
Oh, that's brilliant. Now, Joe, I think a lot of people are in a similar situation that some of your deals are in with the variable rate mortgages and things not going exactly according to plan. What have you taken away? What have you learned through this whole situation when it comes to investor communication and kind of breaking bad news? And what advice do you have for folks that are in that situation as well?
Be direct as you can be, and also share regular updates. I mean, we do monthly updates, and you need to be as direct as you can be. A lot of times, there's uncertainty with what outcomes will be because there's a lot of variables in play. And so as a general partner, I imagine some people will have a challenge, thinking, well, how do I say it? What do I say? Well, you share what you can say in as a direct way as possible. And you might not have the answers, and you likely won't have the answers for what will take place. Yeah. But sharing the information of what you're doing is what I found to be necessary.
Absolutely. Now, you're very connected to the whole market, and you're very connected to a lot of people in the space. What are some of the mistakes you're seeing other operators making when it comes to breaking the news with people or kind of dealing with this situation in their own portfolios?
Lack of communication.
Yeah. Burying their head in the sand kind of thing, hoping it'll all solve itself kind of thing.
Well, yes, for sure, if that's what they're doing.
Yeah.
Separately, but on a related note, maybe they are working on items, but they're not sharing what they're working on. And so for the perception is that they are burying their head in the sand. The reality is maybe they're not. Mm-hmm. But perception equals reality and in the minds of people. So that's something that I'm a limited partner on a lot of deals outside of our portfolio, and I've had deals as a limited partner be wiped away where I've lost my money, and some operators, they've communicated along the way and they've shared what they've done and what they tried to do, and other operators, it was just an email out of the blue. They didn't do regular updates. It's just an email out of the blue, and then you have a hard time just trying to get in touch with the person who is the decision maker or anyone at the company, because there really isn't a company anymore, and they've gone on and they're into a new career. Yeah. So it's there's gonna be hard times. It's a matter of how you show up during those hard times and how you approach things. You can't wave a magic wand and make the market any different. You can't wave a magic wand and make past decisions different, because that's in the past. But what you can do is show up and handle it with integrity, and and do what you think is best, and share that thought process along the way, and you'll absolutely get negative feedback, because that's just a natural thing. It happens, but you can't control how other people respond. You can control how the actions that you take, and that's the focus that I think is important to have.
Most definitely. Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. So hindsight is always 2020. Taking what we've all kind of experienced over the last few years, moving forward, you're definitely still full steam ahead with value add multifamily. You've added 2 more properties to your portfolio in the last 12 months. So taking that whole experience, how has that kind of shifted your view of multifamily and doing deals and buying properties?
Well, um, financing is obviously a big part of this, and the interest rates are what helped valuations, and interest rates are what hurt valuations on the flip side when they increase. So finding a way um, to isolate that so that it's not as much of a wide ranging variable is important. And the way to do that is to have fixed interest rates. Even if you have a rate cap, as people found out, rate caps expire. And if they expire at an inopportune time, then you could pay 10 times more for the rate cap than you did previously. And that's not penciled into the underwriting. So that's one on the financing part. And then two is, I think a perfect storm hit multifamily with inflation, interest rates, and supply. A lot of supply. So I'm confident that the supply has come and gone for the most part. It depends on the market and the submarket, obviously, but as a macro level statement, I'm confident that the wave of supply has been built. Now it's a matter of getting it all leased up and getting those concessions to burn off. And once that happens, then it's going to be a very good day to be an apartment owner. Because you don't have a lot of new supply behind it because of the interest rates that increased. And those new construction projects didn't pencil. So it's identifying where there is a buying opportunity and where the market might be headed, but making sure that your main, your main components of the deal don't have such a wide range of variability with costs.
Yeah, that absolutely makes sense. So the other side of the coin with all of this is raising private capital, attracting limited partners. As you mentioned, you're a limited partner on a number of properties that haven't gone according to plan. A lot of LPs have lost a lot of money over the last few years after some pretty amazing returns a few years before that, that's for sure. What have you found, or what are you seeing people doing these days that's most effective for finding investors and raising capital for their deals?
I think it's having an investor network that understands that there are peaks and valleys in a market cycle. And we, as you mentioned, multifamily owners did very well, right? Running up to 21, 22, and then 22 to today, not so much. And if you have investors who understand that, then it's offering them the buying opportunity alongside you with better terms than that they were receiving before. You asked like what's something that I've seen that's been effective. Well, offering investors a better terms on the profit split or the waterfall, for example, because there aren't as many investors in multifamily now passively as there were. Therefore, they can command those better terms because they're going in now when the water is not as choppy as it was before, but there's still challenges. But I believe, and it's a crystal ball, so who knows? But I believe, based on what I've seen personally and through secondary research, that we're coming into a better time from from the fronts that I mentioned before, with interest rates and mainly supply and demand. So it's speaking to existing investors, having that conversation, sharing your thoughts on where we're at in the market cycle, and then giving them additional incentive with better waterfall structures to invest now and take advantage of what we believe is a good buying opportunity.
Yeah. Sweeten the pot for them a little bit and focus on the ones that kind of get the big picture. Hopefully they've been through a cycle or two. They understand that this is part of the game, and they haven't been beat up too much. And all that makes a lot of sense. So as we're recording this, Joe, we're at the end of 2025. What exciting projects or plans do you have for the new year?
First and foremost, I'll echo what I mentioned earlier. The focus is on our current portfolio. So I'm excited about concessions burning off within our portfolio, because projects are getting leased up faster, and new supply has dissipated. So that's what I am optimistic about and excited about. And I'm also excited about opportunities that we'll likely see. I don't believe there's going to be a lot of distress that comes to the market at once or at all necessarily. I think it's going to be a steady stream, not a big wave, or it's just a steady stream of buying opportunities. And I think there are going to be incredible buying opportunities. I think we've capitalized on a couple. Time will tell. But I see other opportunities over the next 12 months. And that's something I'm excited about seeing what type of opportunities that we capitalize on.
So, Joe, last time we had you on the show, you had a very robust multifamily community going on. And what's going on with that? Are you still involved in that? What does that look like these days?
We have a conference that we host every year, and this will be the 10th year conference. It's best ever conference. So we've got our 10th anniversary, and it's in Salt Lake City, Utah, February 18th through the 20th. besteverconference.com and check it out. It's you'll find people who are experienced, and you'll find people who are humble, and you'll find people who want to help. And that's, if you've attended the conference, you will absolutely agree with those three things. You'll cut above experienced people, humble, and helpful people.
Yeah, that's great. That's fantastic. You wrote a pretty darn good book on the whole topic of investing in multifamily properties. Any more books in the works, or in the back of your mind, or what are your thoughts around that?
There might be a couple books that will be coming out, but not sure when, and not sure the exact direction of them. So more to come whenever I've got that solidified.
Sounds good, Joe. Well, as we're wrapping up, if people want to connect with you, whether it's at the Best Ever Conference, I think we put the URL there, but what's another way for folks to get into your world?
You can go to ashcroftcapital.com, and you'll see all about the company and the opportunity we have.
Fantastic. Hey, Joe, thanks so much for being on the show. This has been great catching up with you.
Wow, enjoyed it. Thanks a lot.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.